Hello, everyone. This is Brittany Button, long-term care insurance specialist for Art Jetter and Company. We also have Brent DeGroot, regional marketing director of OneAmerica, joining us. Today, we're going to be reviewing OneAmerica's new interactive, customizable consumer presentation you can use to help guide the long-term care planning conversation. So, Brent, let's get started.
Well, Brittany, thank you very much. And thank you, everybody who came out today. Really appreciate your time and attendance. Yes, really happy to share our new sales presentation tool. We have partnered with Ensight, and really it's taking a very black and white quote output and making it interactive, giving it full color, make it very easily understandable, repeatable, learnable, and really helps through storytelling that client and advisor experience. So really, that's what we're doing here today, is really talking about this whole asset care sales experience and bringing that asset care quote to life. Tell that best story every time, very easily repeatable, create a modern, personalized client experience. It is interactive if you want it to be that way as well. I will show you a little bit more on the tool here in just a moment as we get into it, but certainly wanted to make sure that you are aware exactly how it works. So, as I've said, taking that very black and white illustration, of course, you can see ours there on the left. We do have a third color, a little bit of blue in there. So it's not totally black and white, but we're going to bring it to life through Ensight, making this great sales experience for both the insurance professional and the client alike. So really, we're transforming that sales process because we're doing it in three main sections, as you'll see as I get into the Ensight system here. And the first section is framing the need. So building the need with that whole sales presentation with the customers in front of you really helps to just kind of build that need with the client, making sure that you're just solidifying that whole program. We're going to visualize the benefits. That's the section there. That's the part that's a little bit more interactive. You can make it as interactive as you want, and some great information that is shared there. And then the last piece is just explaining overall the program that they are looking at. So it's kind of a summary, if you will, all in one section. So with that, I am going to switch screens here, if you'll bear with me a moment. All right. So first and foremost, let me explain a couple things. We have Ensight available for asset care currently. You know, many of you know that we have both an annuity chassis and a life chassis. Asset care is our life chassis. The only thing that this is available for at this time is asset care, with three of our solutions within that program. It would be our single pay, our recurring premiums, so any of those recurring premium options, a 5 pay, 10 pay, 20 pay, pay to age 95, which is kind of our annual pay, and return of premium. Some of you also may know we have a qualified solution that is not on Ensight yet, but we are working on that and have that out by the end of the year. Asset care will be, or excuse me, annuity care will be available hopefully in the first quarter. So soon enough, we'll have all of our solutions on Ensight. But I really wanted to get you, or make sure that you're aware of what's available for Ensight today. So first and foremost, you have to go to our website, OneAmerica.com, and pull up the quoting software. If you've done that before or you've received quotes before, I'll show you kind of what that looks like. But if you've run our software before, you're probably familiar with this screen, if you will. But the green sales button here will not show up until you have the quote fully filled out. So what I did for illustrative purposes today was remove the age, but this is a quote that I've already filled out. I didn't want to have you watch me fill out a whole quote, so I just took out the age, and lo and behold, once I put that age back in, now the whole quote is filled out. Not only does the quote button show up, but this green sales presentation button is there. And that's what I'm going to click on to show you the power of Ensight. So let's click that. It's going to, my pipeline is going to go through what it needs to do, reaching out to Ensight and pulling up a pop-up window here. So bear with me there for a moment. There it comes. So next what will happen, it's going to give us choices to either start a new presentation or to go back and maybe make changes to a previous application and presentation that you've done. So here's your two buttons, update one or create the new presentation. Of course, I'm going to create that new presentation. So now again, we're contacting the Ensight site. It's in the cloud, saves all of this stuff for you. First and foremost, you must name this presentation. So I'm going to call this Ensight Test. We're going to create that new case. That's the radial button that will be defaulted to always be there. But if you wanted to select an existing case and maybe do some updates, you would just do that by clicking that radial button. Then you must go down here and select the Asset Care sales story. So I will do that. We'll hit next. And now what the system is going to do is tell you to import and open that presentation. So let's just do that here. Now the Ensight system is building that presentation. And once that opens, I will maximize this screen so we can see a little bit more. All right, there we go. So here is what the sales presentation looks like. And I'm going to start really on the left-hand side because I want to show you a couple things here. So I'll start kind of at the top. First and foremost, you know, we called this Ensight Test. That was the presentation name, and it's for Mr. and Mrs. Test. But just below that, you're going to see we're in presentation setup mode. Right next to that, there's a presentation view. So if you wanted to look at what it looked like in presentation view itself, it would take you out of the setup mode and just put exactly what you and the client will see when you're doing this in a live aspect. I'm going to leave it in presentation setup mode because I want to talk about some of these things that are down here on the left-hand navigation. First and foremost, I told you about the three sets that we go through of this presentation. So planning for care, kind of building the need, if you will, the asset care benefits. So now once we've built the need, we want to explain exactly what they're looking at. And then last of all is that proposal summary. Now, some of you, when you've used this a couple times, you may say, I don't really need that summary because I've explained everything and we're ready to go. My personal feelings, I would always leave all three checked. But if you don't want a portion of it, you just select that little radial button and it'll turn that portion off in the presentation mode. Again, my recommendation, leave them all checked. So now I want to move over to the right-hand side and talk about a couple of the buttons up here at the top as well. You can download a PDF of this presentation. Now, when you download a PDF of the presentation, it's not going to be dynamic. You can't change things. So it'll be all defaulted for the defaults that are set up in the system. But that is a way, if you wanted to have that PDF and just send that to your client, you could do so. Just know that it is not going to be interactive. My strong suggestion is once you've got it set up the way you want, you click this send button, the little paper airplane there, if you will. What that's going to do is pull up a link that you can then copy, post into a email and send it to your client. Now we've got a way that we're going to just walk through this presentation and it can be totally interactive for them and you. So that's my strong recommendation, is to choose that send button. But again, that is really up to you. We can make revisions. That's what this is for. Remember where I said we could make some changes or revisions to these quotes that you've done. You click that button. And then the presentation settings are all built in with defaults. But if you don't necessarily like those defaults and you want to go in and change some of those, you can put the presentation settings the way you want. I'm not going to click on that. It's just going to take more time. It's pretty straightforward. I'm going to skip now. Oh, you know what? I forgot this one. All throughout the presentation, what is great about this, so many people say, well, where's the quote? I need the quote to make this sale. Well, you really don't, because this presentation walks through everything that you would do with the client anyway, at least from that black and white quote. But if you ever need the quote, you just click on this See Quote button, and that will pull that up for you. So very simple, very easy. The quote is always there. Now, let's run through the presentation and why I think it's so impactful for you as an insurance professional and for your clients. It starts with just a quick open-ended question. You may not need care, but what if you did? You know, what's your family's plan to deal with an extended care event? As insurance professionals or salespeople or advisors, you know, one of the toughest things for us to do is ask a question and not answer it for our clients. But we design this to be very open-ended questions so you could get that interaction with your clients. And that's the power of this whole sales presentation in and of itself. So ask the questions, let them feed back to you the information that they want to give you for that. So here's some impacts. You know, have you considered some of these three important things to consider? Spouses, if that was their plan, if that was kind of what they gave you, well, my spouse is going to take care of me. Well, have you considered that, you know, maybe your spouse isn't physically able to actually pick you up? Maybe she's, you know, 115 pounds and you're a 250-pound male. Is that really going to be applicable, or is that going to be physically able to do that? Probably not. So, and even caring for a loved one really puts a strain on both their physical and mental aspects of them being the caregiver. And then again, ask that question, do they know anybody who has provided care? And let them answer those questions. Okay, so that's spouses. Well, what about the adult children? Well, I raised them, now they can, you know, take care of me. Well, who do you want to take care of you? Again, an open-ended question. But let's think about this. If we truly love our children, do we want them taking care of us? Maybe there's not the dignity with having a child take care of you as well. There's some things that go, you know, showers and bathroom breaks, and you know, maybe there was an accident overnight with the incontinence piece. These are all things to think about. Maybe they don't necessarily want that child to be taking care of them in a dignity factor. By having a good long-term care plan in place, you can let those children or those family members, spouse, whatever, be the care managers, not the caregivers. That's really a power phrase in this long-term care planning world. I'll say it one more time. A good long-term care plan can be the exact thing to let that spouse, that family, be the care managers, not the caregivers. All right, moving on, family dynamics. You know, so many times when informal care is given, it's done by family members, right? But have they considered, you know, who would be the caregiver? That's kind of in that, you know, adult children question as well. But, you know, would that care be shared equally? Typically, it's not. Typically, it's the closest female to that care need that bears most of the responsibility or most of those caregiving duties. And really what that can do is tear apart a very once close-knit family by lumping all of that responsibility on that person that is doing most of the caregiving. So think about those family dynamics. Think about, is this really what we want to do, is have somebody in the family actually do the caregiving. If I continue on through this presentation here, some other impacts that I think are crucial. Financial impacts. So again, not having a plan truly is having a plan. They're just going to pay for it dollar for dollar out of their retirement income. Well, let's remember, why did they save all those years? They were building a retirement portfolio that is earmarked for their retirement. So have they considered the financial impacts of not having a long-term care plan in place? Obviously, the impact on their retirement income. You know, nobody knows how long that care need may be. Maybe it's 12 months, maybe it's 12 years. When they have an Alzheimer's or dementia or Parkinson's, whatever the case may be, these are two big impacts that can really affect that whole retirement portfolio, again, that is earmarked for retirement, not for healthcare costs in their retirement. Further down here too, we've got a few nice statistics that I'll talk about here. The life expectancy has grown 2 times in the period from the 1800s up to 2017. That came out. Obviously, we give credit where everything is due, so we highlight those sources or access those resources right below there. And you may have heard this statistic as well. So if your client is lucky enough to reach the age of 65, that there is a 70% chance at some point in their future that they're going to need some form of long-term care services. Now, I'm going to take that just a step further. This is my own, kind of personal opinion of this, but how many of your clients that you're working with possibly to put a long-term care plan in place are married? If I go by the general statistics, hopefully maybe just over 50% of them are still married. Maybe your client base is a lot healthier than that, if you will. So, but if we look at both spouses having that same 70% chance and they're married, now what's the percentage that one of them would need care out of there? Now we're talking 91%. So it's not just an average that they may need care. This is a high likelihood that a care need is going to be needed. And again, if they haven't planned, they're going to go pay dollar for dollar out of their retirement portfolio. Next up, cognitive issues. Alzheimer's is on the rise, dementia, some of the other diseases like Parkinson's that I mentioned as well. But, today's day and age, 6 million Americans are living with Alzheimer's. By the mid-century, it's going to be 3 times that number. So all things to really think about and share certainly with your clients when they're thinking about putting a plan in place. Now, I like this particular piece of the presentation as well because it gives a visual to everything that we were just talking about. Remember that retirement income is earmarked for their retirement. That's what they're going to spend it on: vacations and potentially a second home, or however they want to do that, boats, recreation vehicles, all that can be lumped in there. So that is earmarked for their retirement. But now you can see once a chronic illness or a physical disability event happens, how quickly that can start to invade or eat away at that retirement income that is meant for just that. So it just gives a little bit of a visual on how negatively that can impact that retirement income. Now, I have built this particular quote for the state of Nebraska. I happen to reside in Omaha, so I just chose Nebraska to build this quote. So what we've done here in this presentation is also shown, you can kind of see right here in the middle, it'll show the average cost of LTC in Nebraska as it stands today. That is taking all metro areas. Now, there's only a few metro areas really in Nebraska. However, it'll take really the whole state average and lump that together. So that's kind of where we get with the nearly 75,000 annually as far as the cost. But that also averages all the costs of informal care, home care, nursing homes, and assisted living facilities. So it kind of lumps all those together. Now, let's say they live here in Nebraska, but they say, I'm not going to retire here. I want to move to Arizona. Well, if they would like to look at our whole cost of care map, we can just click on the See More Details button. That will bring you out to this beautiful map that's right behind where it shows the average. And now you can compare and contrast what the costs are in any state. And not only in that, this is such a great tool that's available for you. It does break down then different metro areas in a state. It breaks down the cost of care for all of those 4 levels of care that I talked about. It also can show what the care need would be anywhere on a spectrum from, the next year all the way up to 30 years in the future. So really a great tool, but of course, at least it's built into this presentation and available for you. Again, if you did just the PDF, that would not be interactive, right? So that's going to just show the annual average for Nebraska, or the quote you're running. So thought I would mention that really quick. Great little piece there. Now, so we understand that they're looking to plan here, right? So they want to put a plan in place. Okay, well, you really have 4 buckets to choose from. Every American kind of has this 4 bucket strategy. So they could wait, and if they needed, excuse me, let me start at the very bottom here. So it's basically based on the need of $1,000 of expense, right? So which one of those 4 buckets are you going to pull to get that $1,000 of expense? Well, they could start with their IRAs, 401ks, their qualified sources, whatever that case may be. Well, unfortunately, to get that same $1,000, because there's income tax, they're going to have to pull $1,300 out to get that same $1,000 of need for that expense. So it's really the income that we need for these expenditures. So always think of it that way as well. It's not an asset problem, it's an income problem. All right, second bucket, sure, they could pull it from their non-qualified assets, but those have capital gains tax that would be imparted on that. So in order to get that same $1,000, now you're going to pull $1,150. So you still have tax implications. Okay, so if they didn't plan, and their plan really is just to pull it cash, 1 for 1, dollar for dollar, they can certainly do that. Pay it out of your cash, probably minimal taxes there, but it is just that dollar for dollar outlay. The fourth bucket, and when you really lay this out to them, hopefully they'll really understand exactly what we're talking about here. Compliance didn't let us put a true dollar amount in here, but it really talks about the tax-free benefits of LTC and having a good long-term care insurance policy. So it could actually be a reduction up to 75% on that same dollar. So to get that $1,000 of expense, if we're talking on a 75% level, now we're only talking $250 of outlay to get that same $1,000 of money for any of those LTC expenses. Now, they may be in a different tax bracket. Maybe they're in the 33% tax bracket, whatever the case may be. But hey, still a much better situation than any one of the other 3 buckets. So we really wanted to kind of walk through that as well. And again, you'll see up here, you've got a couple open-ended questions that you can ask your client going along the way in this presentation. All right, next up in this section, then it talks about asset care. So what is asset care? Well, it's an asset-based LTC solution. All the LTC benefits out of here are tax-free, and it can help protect their retirement income. But how it helps? Well, there's coverage for long-term care. We would pull from the death benefit. Asset care is a whole life insurance policy based chassis, if you will. So we will pull from that death benefit for the expenditures for long-term care. So they got the long-term care coverage out of an asset care plan. If they never need it, it really satisfies one of the main objections with planning for long-term care. Well, what if I never need this stuff and I pay for premiums all my life? Well, now no matter what, because it's built on a whole life chassis, if they've got any of the remaining funds in that death benefit, that is going to be passed on to their named beneficiary or beneficiaries. And it's all on a tax-free basis. If they never need it, obviously the full death benefit gets passed on again on a tax-free basis. And then the other great value, if you will, or portion of an asset care policy, they've always got access to the cash value. This is their asset. They're going to use their asset in any way they'd like. And let's say they get in a financial pinch and they just need to access some of the cash value. They can always take a loan against that policy. Now, when they do, they are reducing their LTC benefits until they put the money back in. So that's pretty straightforward. It's on a one-to-one pro rata basis, if you will. But great ways with asset care for planning for any of these long-term care expenditures in the future. And the last piece of this section, we certainly want to talk about OneAmerica. Maybe they don't know who we are. Look, we've been in business since 1877. It talks about our 35 plus years in LTC, so designing these same asset-based structures for more than 35 years now. And that also means paying claims for that time period as well. So again, a real big boost in confidence with anything that you are representing to your clientele. We are a mutual company. I neglected to mention that as well. So we are always looking to provide the best benefit for the lowest amount of premium for our consumers, because we're not owned by stockholders. We don't have to report to them. We're reporting to those same people that actually own our policies. And then the last thing here is our AM Best rating of A+. So that is section one. That's kind of building the need, if you will. Now let's go into the second section here of the asset care benefits. So what we're going to do here is let this just pull up for you guys. I see that it's coming there now. Perfect. All right. So what we've done here, this is a very interactive portion of this presentation. Now you start to just talk about them. Well, Mr. and Mrs. Test, have you had any long-term care experiences in your family's history? And let them answer. And maybe they start to give you, hey, I think I'm going to start needing care, if at all, maybe at age 80. So Mr. Test says, I may need care starting at age 80. Mrs. Test said, it might be a couple of years longer for me. So we've built in here 80 and 82 for when they first start. Now, those are kind of defaulted to the system. However, I said this is interactive. If you want to change those ages, you just come in here and we change that. I'll just say, okay, they both agreed, yeah, maybe at age 82 is maybe the time that we may start to see any claims if we have them. So now the system, very dynamic, updates that. Now we're looking at both of them starting at age 82. Now, if you go below that, you know what, even before I get into the benefits, I wanted to remind you that quote button is always there. So if you ever want to see the quote all through this presentation, it is right there at the top. So now let's go to the benefits section here, and we'll talk about exactly what happens. So we have funded this asset care with a single premium of $200,000. That may sound like a lot of money, but let's remember, if you're looking at any of our competitors, which basically offer on an individual basis, to get a meaningful benefit for them, many times they're going to ask for $100,000 per person. So isn't that $200,000 for the couple? Again, we've run a couple. We've got the joint availability on our plans, so that's what we're doing here. So a $200,000 premium. But look what this certainly provides. Again, anything with one of these little pencils is dynamic. You can change those ages. So we've said they were both age 60. And they both said that they're going to maybe start receiving benefits at age 82. So it's automatically going to show, well, all right, so what do those benefits look like at age 82 in 22 years of when you take out that policy? So on a personal basis, so one person, the monthly payout will be $86.68 per month for any LTC expenditures. What is that total annually? $104,016. Now, they can both be on care at the same time and both receive benefits. If they did, what's the monthly payout? Up to $17,336 per month. On an annual basis, that would be payout $208,000 or just over $208,000. So you think about how quickly they can recoup the costs, the ROI, if you will, on these premiums they're putting in to protect themselves. But what's great about this one is I built in our lifetime COB rider, which means no matter how long either one of these individuals would need care, that $86.68 is going to be available for them each month in the form of a reimbursement benefit. Now, so that's the benefits section. Again, I also talked about the other two portions of an asset care policy. So if you both insured, say at age 85, what's the death benefit that would be passed on tax-free to the heirs? Well, here we're talking $288,917. Again, it's a dynamic number. You can change that if you'd like. And that would change the benefit amount here, if you will, for the death benefit. If I go down to this last section, you need those emergency funds. And again, we've built in defaulted for age 70, but you can change that. Maybe they need it at age 60, whatever the case may be. It's going to show what that guaranteed cash value is available to them. So if they need to take a loan or need some emergency funds at any point, at age 70, the cash value on this policy is $136.31. So really showing how the benefits of asset care really are attributable to your clients. This section, because I have built in our lifetime COB rider, this section pulls up. If you wanted to create more of an average plan, so not have that lifetime benefit, this section will not show up. Again, that's where the Ensight system is smart enough to understand what you are quoting. So lifetime, which over 60% of our business is, will have this section in this portion of the Ensight presentation. So why do we have this? Well, it's just showing, okay, if the common length is 6 years, that's basically taking the very average of a male and female put together, six benefit or 6 year length of time. What happens then is, I had something pop up here, apologize, I don't think you're seeing that, but let's just see if I can get rid of it. Well, all right, I think we're back on the screen. Brittany, are you still there? Are you seeing the screen or something else?
So Brent, yes, we can still see your presentation and the screen. So nothing popped up on our end. You're good to go.
All right, excellent. So let me get back then down. Oh, see, it's not moving. All right. So I'm still explaining the lifetime benefits here. Something I got to do here to move this out of the way. How do I do that? Let's go back to sharing if I can. Go. Let's share this application. All right, now we should be more dynamic again. All right, so let's get back to this section right here, the lifetime benefits. So if a common length is 6 years, right? Average for male and female. We'll look at some of the other carriers' longest claims and how much they have paid out in some of those. So if they're only planning for the average, what could really happen if they exhaust their common or average plan? That plan could be exhausted, and now they're right back into that same portfolio that we were trying to protect all along. What's great about the asset care policy with the COB rider as our lifetime benefit, it will guarantee that for as long as either one of those clients needs benefits, that will pay out on that monthly reimbursement basis. All right, so total care. This is another nice little section of this policy as well, because it's a little bit of a slide rule here. And we said that both are going to start claiming. I'm going to move this up just a little bit further. We said both of the individuals may start claiming at age 82. So let's go back to 22 years into this policy. Now they're both on claim, right? So each one could have up to $104,016. So a total cumulative payout would be $208. But let's just say that they both had at least a 4-year need. So let me move this over one more. But you can see how dynamic this really is. So for each insured, it's paying out $416.64. So a total cumulative payout for their initial $200,000 investment, we've got $832.128 dollars paid out for this. And this is just continues on to really show how quickly and how powerful these plans are for just their initial investment. Very interactive. I think it's a great way to really show your clients exactly what's happening with their policy. So good for you for thinking about the future. Well, what is long-term care? Certainly it talks a little bit about that, ways to use those LTC benefits, obviously home care, assisted living facility, adult daycare, nursing home, you know, hospice care. Unfortunately, that's kind of end of life. Those are all things that are covered by asset care, but I certainly wanted to make sure that you have that information as well, and that is built into the presentation. Now, probably the biggest thing is where the rubber meets the road. If they need to claim on their policy, well, help is just a phone call away. We get such great feedback on our claims concierge program, and it just starts with a simple call to our claims concierge in Indianapolis. We haven't shipped those out across the seas. There are no language barriers. They are going to be the claims concierge from day one of that policy all the way to the fruition of that policy. So that's the again, the great feedback that we get on our whole claims concierge program. So I just really wanted to talk through that with you as well. So that is it for the second section. The last section is really just a summary. Let's let this update there. Yep, it updated the dates, but it just gives you a quick summary of kind of everything that they went through in their policy, what the amount is per person, what it is if they both happen to be on claim, both monthly and annually. It also talks about the total death benefit that's available, and again, any cash that's available all throughout the lifetime. They can change this, it would change those amounts, but just for intents of illustrative purposes today, I'll just leave that in the sake of time. And then it really calls for the last thing, which is always a call to action. All right, well, let's get started. We've gone through the presentation now. Let's get started filling out a premium. Why is it better to start sooner than later? Well, certainly lower premiums, right? Secure your coverage, and that way you don't you ensure you still have your health. Because if you wait too long and you don't have your health, it doesn't matter how much in premiums you may be willing to pay, you're not going to be able to get a coverage. So a key thing there, and then certainly that peace of mind. What if there was an early claim? They're going to have that peace of mind by getting that plan started as quickly as possible. And then what's going to wrap up with is your name and contact information. Now, it wouldn't be me, obviously. This was the quote that I ran. That's why it pulls my information in. It would be your information. And again, just a great way to walk through a very simple, easily repeatable section of the asset care quote, bringing it to life. And remember, that quote is always available if that's what you need as kind of a backup to explain any other questions. But with that, I am going to wrap up here and say that's a wonderful tool that we put in your hands. Brittany, are there any questions?
Yes, so it looks like we've had some folks already in the system playing around. So the question that did come through, and we understand for annuity-funded asset care and annuity care, those presentations will be available later. But we've got some folks wondering about California and the variations of asset care, when that's going to be available through the Ensight software.
That is a great question. And unfortunately, the answer is we need California to approve the latest version that we're selling in all other states before Ensight will be available to them.
All right, perfect. So for the folks in California on the call today, we'll be in touch as soon as we get that green light go and you have this presentation available to you. So with that, I want to thank everyone for joining us today. And of course, Brent, thank you for co-piloting today's session. If you still have questions or would like a one-on-one discussion, please feel free to reach out to our team at 800-228-0008 or shoot us a quick email at ltci@jetter.com. So I hope everyone enjoys the rest of your day. Take care and look forward to speaking with you soon. Thank you.
Thank you all. Thank you, Brittany.